Hey, what's up guys? John here. We are stepping into hyperinflation, and this isn't an opinion, it's a fact. We're stepping into something very concerning. I'm going to break this down for you. I've done research all day looking at this and kind of fact checking it myself. Just shocked at what I just came up with. Like, this is unreal. Now, people in America, we're aware, Argentina, Turkey, these other countries, they might have 50, 100% inflation. Nobody cares in America for the most part because everyone's just focused on themselves and the people around them and what's happening here. But that is coming here, and I'm going to break it down for you. Hit the like button. When you hit the like button, YouTube will share this content to educate more people. If you want to hit the like button, that's cool. If not, whatever. Today's video is sponsored by GreatCreditFast.com. That's GreatCreditFast.com. I started this company over a year ago predicting that we're going to be stepping into a debt situation with rising interest rates, more defaults, and a very, very, very challenging environment. And that's what we're stepping into. If you want to fix your credit to take advantage of the greatest wealth transfer of all time, we would love to help you at GreatCreditFast.com. If you have high interest credit card debt and you feel like you're trapped with good credit, in many cases you can do a balance transfer and transfer that debt to a 0% interest credit card and pay it off. And the world gets a lot easier when you're paying at 0% versus 27%. But you're going to need good credit to get approved for something like that. And again, we'd love to help you at GreatCreditFast.com. Take a look at this. This came out in 2014. So I'm going to paint a timeline for you. And remember this guy's name, Jared Bernstein. This guy's name is extremely important. But new research reveals that what was once a privilege is now a burden, undermining job growth, pumping up budget and trade deficits, and inflating financial bubbles. To get the American economy on track, the government needs to drop its commitment to maintaining the dollar as a reserve currency status. Remember, again, this guy's named Jared Bernstein. Now, look at this person. I'm not going to pay for a Washington Post subscription, but look, Jared Bernstein, same guy. Same guy. And it says, is King Dollar really under threat? I sort of hope so. Jared Bernstein. Now, last week, June 14th, statement from President Biden on confirmation of Jared Bernstein. Same guy, the last 10 years basically, that's saying that we need to lose the reserve currency status, is now appointed. And he says, I want to thank the Senate for confirming my new nominee for Chair of Council of Economic Advisors, Jared Bernstein. Our economy continues to show progress tackling inflation while unemployment remains at historic lows. While there is more work to do, jobs are up, wages are up, inflation is down, and Jared uniquely understands that a job is about more than a paycheck. It is about the dignity of work. I look forward to Jared's continued leadership as we build an economy that works for working people. Now, didn't say American people, working people. Remember, it's all about inclusion. It's all about making the world a fair and just place. With the US dollar being the reserve currency, that means that we're up here and everyone else is down here, and that is not what the messaging has been the last couple of years. The messaging has been about being inclusive. Well, now listen, the US dollar share of total global reserves in real terms collapsed from about 66% in 2003 to 55% in 2021 to 47% in 2022. In particular, the 8% US dollar reserve decline over the last year is very concerning, as it is roughly 10x the average annual decline over the past 2 decades. Right? Janet Yellen says expect a gradual decline in the share of global reserves. But look at this. BRICS expansion can't wait. Now, many people, they know about BRICS, but you don't know about this. And you don't know about how this all ties together. So, right here, the BRICS group is yet evolving as its organizations and needs time to develop its institutions and government structures. Its constituents are evolving nationally, establishing robust governance and developing institutions and exploring associated socioeconomic convergences. BRICS countries differ significantly in terms of economic development. China, with its sheer size of the economy, is challenging existing governance models and institutions, while South Africa is still coping with structural economic challenges. India and Brazil remain attractive economically, but Russia is cut off financially and economically. Recognizing the diversity, now listen to these buzzwords in this. BRICS members need to engage with each other to build frameworks for cooperation, explore areas of mutual interest, and foster collaboration. According to BRICS countries, should prioritize strengthening of its new development bank to promote financial and economic inclusion on a global scale. Does that or does that not sound like what we have been hearing? They say we need global inclusion. Global inclusion. That's exactly what they're doing. The NDB can play a crucial role in providing funding for infrastructure projects, sustainable development initiatives, and other priority areas within BRICS countries and beyond by enhancing its capacity, expanding its lending capabilities, and ensuring efficient governance. BRICS can contribute to reducing the development gap and fostering inclusive growth. right? So you start to look at this. Additionally, the idea of BRICS currency for trade and internal payments is worth exploring. A sheer currency can facilitate trade and investment, reduce transaction costs, enhance economic cooperation with, I'll leave it in the show notes. Look at this yourself. But pay attention to this. The U.S. may now be able to join or mirror EU's plan to impose carbon fee on imports of high-emitting goods. Now you think about it, I thought they wanted to combat inflation, right? This is the IMF. This is the IMF website. This isn't, I'll even pull it down a little bit as you can see, imf.org, right? This is the IMF website, and they're saying that we need to start to have a carbon fee on high-emitting goods. How is that going to combat inflation? The U.S. is also in a stronger position to implement a recent deal with the EU to restrict imports of steel and aluminum from Asia and elsewhere if they do not meet emission standards. Now, some people might not understand what I mean. When you have a fee that's passed along from the seller, it always goes to the buyer. Whenever, anytime. If your landlord sees a property tax increase, if they get hit with higher insurance, it gets passed on to the consumer. If Amazon was buying a TV for $100 and selling it to you for $120, and then now their costs went up, your costs are going to go up. This is what's going to happen. We're going to start stepping into higher and higher and higher inflation. What are they going to do to combat that? They're going to print money. That's what they're going to do. But it's not going to go like it did in the past. More broadly, the new law presents an opportunity to engage with partners to create special trading rules that support clean energy. Now, a lot of people think that clean energy will just pop over there and it'll be no problem. But a lot of people aren't really looking into it. Some estimates are $4.5 trillion. Some are saying it's $131 trillion on a global scale. Others saying $62 trillion. One saying $275 trillion. Who knows? But it's going to be expensive. And how are we going to fund it? It's the big question. Are we just going to all work together and it's all going to happen? No. It's going to be increased taxes and excessive money printing. That's what's going to happen. But are governments around the world going to fund that? No, I don't think so. They're already working with each other in alliance to create a competing currency. And if you look at what's going on right now, would those same countries want to support us? Look what we've done recently. This is all just sent over all overseas. This does not include the money that we've sent, which is hundreds of billions of dollars. So, and now we're in America, we're pushing for this 4-day work week this came out today. Do Americans want to live or live to work? Data shows that Americans work more hours and get less vacation than many other developed nations. Economists, this is what they want us to work less. They want us to be fully dependent, right? This is what they're pushing for. National debt tops $32 trillion, but what's crazy is it went up $572 billion since the debt ceiling was lifted. So it was lifted 3 weeks ago, not even 2.5 weeks ago. We're just printing, boom, 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 printing excessive money. How are we going to combat inflation if we're going to reduce fossil fuels and add in a ton of expenses? It's not going to happen. It's not going to happen. Now, we already sent $113 billion in 2022, and I believe he just sent another $325 million last week. This is going to continue. And we're stepping into some very, very interesting times. So a lot of people are looking at this. They're saying, what should I do? How should I play this? Rule number one, a lot of people would always message me on Instagram or send me emails and say, hey, John, I want to invest in real estate. But then they would tell me that they have $15,000 or $20,000 or $30,000 in credit card debt. If you're paying somebody else 26% and you're worried about, trying to make 6 or 8 or 10% in a real estate deal, it doesn't make any sense. It makes more sense to get out of debt. And right now, debt is going to be the noose that is around the neck of most of the American people. It's extremely expensive. I was talking to my wife about this recently, about just how expensive everything is. How do people make it in this environment right now? Well, they have to be extremely strategic. They have to be really, really cautious. They have to really be in the right line of work, and they have to pay attention to the world because the world is changing and it's changing rapidly. We're going to start to see, I believe, a lot of corporations realize this change, and they're going to start moving more and more and more opportunity outside of America, opening offices in South America, opening them in India, opening them in other locations to reduce their own expenses and to position themselves for growth. Because when we step into this world of change, what are we going to see? We're going to see wages fall, but debts are only going to go up. So what's going to happen? The middle class is about to get completely smacked, and nobody's talking about it. The media's not talking about it. They're pretending like we got this inflation thing under control. I'm not buying it. I think we're stepping into some really, really big problems. And I think people need to pay close attention to it. I've started this credit repair company over a year ago. And back then I predicted that what we're going to step into is inflation, high borrowing cost, and a hurt consumer. We're going to start seeing a lot more defaults. That's exactly what's happening. So if you want to invest, you want to position yourself for what's going to be the greatest wealth transfer of all time, we'd love to help you at greatcreditfast.com. Now my whole philosophy has always been money is never lost, it's simply transferred. And this time it's being transferred from the American people, the 99% to the 1%. And the next couple of years are going to be extremely crucial. If you want to get into the top 1%, you want to position yourself the next few years, you don't have a minute to waste. We'd love to help you fix your credit at greatcreditfast.com. Add me on Instagram for short form content I won't post here. And I'll leave all the facts, as I said, in the show notes below this video. And I'll catch you guys in the next one.